Good afternoon, everybody. My name is Lee Schwartz, and I'd like to welcome you to our webinar today for veterinary practices. Today's topic is You Got the Funding, Now How Do You Report It? I noticed a lot of familiar names on the attendee list. I know a lot of you have been with us before, have been a part of our past webinars, and we're excited to continue bringing you this important information. Now, we'll jump in here in a sec, but a couple of quick housekeeping items. If you have a question during the webinar, open up the chat box in Zoom and submit your question to all panelists. We are going to leave plenty of time at the end for Q&A. Also, we're recording this webinar today. You will receive an email with a link to a survey, as well as our SVA resource page where the webinar recording will be made available. Now, many of you are already clients of SVA, and we'd encourage you to reach out to your SVA contact if you have any questions coming out of this. I'd also encourage you to share our contact details with other business contacts who could use our help. Over the last 8 months, we've found there are a ton of practices that aren't getting timely or knowledgeable advice from their CPAs, their advisors, and we're happy to help. If you're not a client and you have questions, please reach out to me, Lee Schwartz, and I'll get you connected to a subject matter expert at SVA who can get your questions answered. I know there's a lot of anxiety around forgiveness of the PPP loan. So we're going to focus today on updating you on the current status, how to track the funds, and ultimately how to apply for forgiveness. If you've attended any of our past webinars, you may already be familiar with Andy and Laura, but for you first timers, both Andy Slinger and Laura Zock are CPAs and principals with SVA certified public accountants. And they help lead the team that works with veterinarians around Wisconsin and the Midwest. It really helps them minimize taxes and maximize profitability. Now, with that being said, I will be back for the Q&A, but Laura, I'm going to let you take it from here.
Great. Thanks, Lee, for kicking us off. Welcome, everyone. Andy and I are excited to give you some updates on what's all going on with the different stimulus programs available for coronavirus, specifically related to veterinarian practices, with a focus primarily on PPP, which is definitely what we get the most questions about here. When you think about everything we've been dealing with through these coronavirus uncertain times, there's been a lot of stimulus available for veterinarian practices. The biggest one being obviously PPP loans. There was also the option to apply for an EIDL grant. Those were issued to practices with some restrictions, but the maximum amount being $10,000 of a grant advance for those applications. Some practices had the option to go ahead and apply for a economic disaster loan through the Small Business Administration's program, and those were low interest, long-term loan options that were really great for some practices who had a certain need for some additional cash flow to help get through the uncertain times of coronavirus. And then lastly, there were also some state and local grants and programs available for some smaller dollar amounts for some of the small businesses and their communities. The IRS came through to Congress, and with the passing of the FFCRA, which stands for Families First Coronavirus Response Act, they made some tax credits available too, and some expanded leave options for employers to offer to help employees with all the things going on with coronavirus. So for example, there was the FFCRA expanded paid sick leave where employees had up to an additional 80 hours available as paid sick leave to help cover things like if they were under quarantine because of coronavirus and a state or local order for that, or if they had coronavirus themselves or needed to isolate because of coronavirus or needed to take care of someone who in fact had coronavirus. There was also the expanded family and medical leave, which gave another 80 hours to help families or employees who were at home because their children didn't have anywhere to go, either because daycares were closed down or because schooling is virtual and not in person. And the nice benefit here is that there are refundable tax credits or immediate tax credits available for employers to have offered this additional sick time or family leave time to help their employees out during these times. So really overall, lots of different options available. But as I said, the PPP being the biggest one of them. So next we're going to go through a little bit more about the PPP. I'm first going to do a little bit of refresher, get us all on the same page really for our conversation about the PPP and brush up on some of the specifics of it. Now remember, the PPP, or the Payroll Protection Program, was really put into place to help encourage employers to be able to stay open and keep their employees employed and keep them on payroll, and to try to help mitigate what all went to unemployment. So the PPP focus is really on giving employers, businesses money to help them continue to pay wages. So if they used the PPP monies for certain expenses, then those expenses might be forgiven. That was really one of the big benefits of the whole PPP program. Since the focus was on payroll, the eligible expenses for forgiveness are salaries and wages paid to employees, with some limitations if you have employees making over $100,000 in a year. It was also considered payroll costs are your employer paid group health insurance premiums, employer paid retirement plan benefits. So think about maybe the safe harbor or the 3% or 2% match that you might have with your retirement plans, and also state unemployment tax. There were also some non-payroll costs that are eligible for forgiveness, and those would be rent, utilities, and interest on mortgage obligations. Now, obviously, the focus was on keeping employees on payroll, so some limitations were put into play. Those being, in order to maximize your forgiveness on the PPP loan, you needed to spend at least 60% of the loan proceeds on these payroll costs listed here, which then allows you to use up to 40% if needed to help cover some non-payroll costs. Now, what kind of time period can we look at in terms of thinking about forgiveness here? You'll remember when PPP first came out, it was meant to be an 8-week time period. And then pretty quickly, we all realized that coronavirus was going to go on a lot longer than we had initially thought. Businesses were going to be seeing the effects much longer than we thought. So they went ahead and expanded that 8-week period to be up to a 24-week period. So most loan recipients can now choose either that initial 8-week period that would have started on the day that they received their PPP proceeds, or they could pick an 8-week alternative covered period, which was meant to align with the payroll cycle of your business, or you could opt for a 24-week period, which is what we're seeing most practices do, because really you've tripled your amount of time that you have to spend in the payroll and non-payroll categories to maximize your forgiveness of the PPP loan. There is one little caveat. If you happen to receive your PPP loan through what I'm calling like the second phase of funding, which is loans received on or after June 5th, it's required that you use a 24-week period instead of that 8-week period. Now, looking ahead on this, you've got your PPP loan, you've used your PPP loan, and your coverage period has ended. What do you do next? Well, now it's time to start thinking about loan forgiveness. The SVA is now accepting applications, and how this process works is you as the recipient of the PPP loan first go to your bank, because it's with the bank that you actually do the PPP forgiveness application. And once you submit that to your bank, they have 60 days to review the application, review the documentation that they're requiring to go with the application, and then make an initial decision on what amount is forgiven. When the bank wraps up that process within 60 days, they then send it off to the SVA for the SVA's, I'll call it a blessing on their decision. So the SVA then has 90 days to make their determination on what is forgiven versus what is not forgiven. And then if whatever decision the SVA makes, they then send the money to the bank for the loan, and then the bank will essentially take your loan off of their books. Now, one of the things that was talked about earlier on the whole PPP front was that applications were due October 31st, which just ended a few days ago. That is not the case. Applications are actually not due until 10 months after your coverage period has ended. So all of you on this call, nothing to stress about. You do have a large window of time coming yet to actually get your loan application in. And when you think about like what this might look like on your financial statements, the PPP monies were a loan. So it's not counted in income. The amounts are not showing up on your income statement because they should be listed as a loan. And it's going to stay as a loan on the balance sheet of your business until the liability has been forgiven by the SVA. Now let's think about what the tax perspective is here. And this has been the hot topic for sure. This is also one of the biggest areas where there's still a lot of uncertainty. But what we do know is that income from the PPP loan forgiveness is not going to be considered taxable, which is a really great thing. So after you've gone through the whole forgiveness process and had your loan approved for forgiveness, that generates loan cancellation, which in this specific case is not going to be treated as taxable income for your business or for you as the owner. Now, what we do know as well, though, is that any expenses that were paid for with the PPP loan that have been forgiven, the IRS is saying that those expenses are not deductible. So when you pause and take a minute to think about that, we have loan forgiveness that isn't taxable, but a whole bunch of expenses that are not deductible. In essence, what we have then is that the PPP loan ultimately is taxable. There's been current legislation that's been trying to be passed for quite some time now that would fix this and make those expenses deductible, but no progress has been made at this time. And as you know, things are a little bit in flux with the election going on. We in the CPA world are keeping our ears open and out there so that we can immediately advise our clients once more is known about this. There's also not guidance out there specifically on what year the non-deductible expenses would be effective. This might be a 2020 application for taxes, or it might be a 2021 application for taxes. Knowing that some loans might be forgiven here yet in 2020, but considering that you have 10 months beyond your coverage period to do the application, it might be that the loan is forgiven in 2021 here. So some uncertainties around that as well. And Andy will be getting into some more specifics with that later on his slides. So now let's move ahead and talk a little bit about the loan and what forgiveness might look like. Really, most practices should see that most of their loan will be forgiven by using only payroll costs. If you think about it, when you went ahead and did the loan application, it was based on 2.5 months worth of payroll costs and anything that was considered payroll costs. And then they gave us all a 24-week period to be able to use the loan proceeds on expenses that were considered qualified for forgiveness. So even if you've had a decrease in your FTEs or a partial wage reduction, which are some of the specifics that practices need to consider when you're going through your loan forgiveness process, it might be possible for you to still achieve maximum forgiveness through the use of considering your payroll expenses alone. Another quirk with the whole PPP loan thing was many practices applied for the EIDL grant that was essentially limited to $10,000 per practice, depending on the number of FTE employees that you had. When you go through the PPP loan forgiveness process, whatever amount you received as an EIDL grant will be counted against this and not considered part of the PPP loan. A couple other specifics then, moving ahead about the PPP loans. Any loans that are over $2 million, the SVA is going to be auditing those. Not much details is known on that yet and how that process will work, when it might begin, but really that'll affect a lot of bigger businesses. But for many of us on this call, our PPP loans are probably not at that $2 million mark. Another thing to keep in mind too is that if you do have a loan that's quite large, it's important to document that the loan was necessary and your reasons for going ahead and applying for the PPP loan in the first place. Well, hopefully that got us all up to speed on PPP and where things are at. I'm going to kick it ahead now to Andy, who's going to cover what is new on PPP.
Thank you, Laura. Well, as far as what's new, unfortunately, as Laura alluded to, very little is new right now. We are all patiently waiting for, guidance from Congress, from the Treasury, IRS, the SVA on, the specifics of, the forgiveness process and in particular the timing of how the taxability will work. Having said that, since, we last talked through a webinar, there have been a couple tidbits released. Number one, question we get is what form do we use? And so right now there's 3 forms, and I encourage you to make sure you're using the right form. One, of course, is the long version of the 3508. Recently, also, there was a 3508EZ released, and I encourage you to look at that to see if you check the boxes that would allow you to use that form. And then last is the most recently released form is the 3508S. And if this applies to you, it's only if your loan is $50,000 or less. And again, it is even simpler than the EZ. So certainly no sense using a form that's more complicated than you need. So again, make sure you're using the correct form. The second tidbit that was released, this is a little technical. So before I explain it, I want to remind you, Laura alluded to that most of you will receive full forgiveness by simply submitting payroll costs. Okay, so if you think you're in that box, then what I'm about to say won't apply to you. But if you do anticipate submitting rent expense for forgiveness and the rent you pay is considered related party rent, then this might apply. So related party is probably the opposite of independent third party, okay? And if it's a related party that you're renting from, then the rent that you submit and receive forgiveness for can be no more than the related monthly mortgage interest on the loan for the building on the related party's books. So what does that mean? Simplest example of a related party would be you own the building in a separate legal entity and you rent to your practice in another entity, okay? So you're essentially renting from yourself. So again, if you have a mortgage on the building in the other entity, the rent limited to the monthly interest expense. If you happen to own the building debt-free, guess what? No rent will qualify for forgiveness, okay? So a little technical, but I think that's the simplest example. That's it for what's new. And regardless of the fact that little is new, there's a lot of things you can do now, to get ready to actually submit your application. The first thing, and I have stressed this all along, is be in constant touch with your bank. The bank is the gatekeeper to this whole process, okay? You can't start the process until the bank says, yes, please submit your application. So you got to be in touch with the bank. So if at this point you don't know if your bank is accepting applications, that's the first thing to do is reach out. Because I'm still seeing banks that either are flat out not accepting applications or they say, well, if you really want to, let us know, okay? And some are saying, yeah, we'll take them. So it's really all over the map right now. So check with your bank. And then secondly is specifically ask the bank what documentation they're going to need in addition to the application to support your numbers. Because again, it's different and they're the gatekeeper. One bank is completely different than the other. And it's important then once you submit the application, once you submit the support, to professionally stay in touch with the bank, stay on top of it, let them know that you'd like this processed as soon as possible, because again, they're the gatekeeper. You submit it to them, they've got 60 days, but the sooner they process it and approve it on their end and submit it to the SBA, then guess what? You've started the clock with the SBA and that 90-day clock then starts. So again, if you're looking to have peace of mind, get this done as soon as possible, you want to keep things moving. In tandem, you want to look at that covered period because as Laura said, initially it was 8 weeks, now it's 24. I would think most people are going to use the 24, but again, make sure that you're considering what's going to work best for you to achieve maximum forgiveness of the loan. And I think just as a tidbit on that, as a firm, we were just talking that, we did receive our first notification of a client receiving full forgiveness from the SVA. And in that case, it was a 3-week process from start to finish. So I think what might be happening is right now, there's not a big backlog, with the SVA. So if you can get the application in early, they might be able to consider it, get forgiveness quicker. Obviously, at some point, once there's a backlog, that process might lengthen out, okay? All right, the other thing that is really important to start doing now is have the conversation with us or with your advisor on what is this going to mean from a tax perspective. The other thing I've said all along is this is going to cause a big surprise for a lot of taxpayers, because they don't realize, right now they just think, oh, this is tax-free money. Well, yes, technically it's tax-free revenue, but guess what? The related expenses as of right now are non-deductible. What that means is they're taxable, okay? So there's going to be a tax effect unless the law changes, as Laura alluded to. So the options, and this is not all inclusive, but it's very possible that in 2020 here, you'll receive forgiveness of the loan, which means it will become non-taxable income, and that the law will stay the same and those expenses will be non-deductible here in 2020. Another option is that you won't receive forgiveness of the loan until 2021. That means that you'll incur non-taxable income in 2021, but once we get guidance, they might say, well, even though we forgave your loan in 2021, the related expenses in 2020 are non-deductible in 2020. Okay, that's an option. And then of course, a third option would be you receive forgiveness of the loan in 2021, and they say, okay, even though the expenses were paid in 2020, you have the option of incurring the non-deductibility and the tax effect in 2021. Okay, so a lot of options, but you got to have the conversation now before the end of the year, before, oh, I have a surprise, before there's nothing you can do about it. Okay, so have the conversation. The other thing that is a concern is, depending on the results of the election, 2021 could have seen a change in tax law, in the tax rates, which may have affected your decision on how maybe to structure whether the taxable effect would be 2020, 2021. Now, for any of you political junkies out there that stayed up into the wee hours of the morning watching the election results and are still keeping up with the election results, a lot of what would hinge on a tax law change would be having the Senate change hands, change control. Again, my simple opinion is it's looking less likely that, regardless of what happens on the presidential side, it's looking less likely that the Senate will change control, but stay tuned. I think anything is still possible. All right. The other thing that you need to consider is, with all those options, it's also going to have a different effect depending on how you are structured as a practice. So if you're a subchapter C corporation, if you're a subchapter S corporation, if you're a partnership, if you're a sole proprietor, independent, it could have a completely different effect. It could be a completely different strategy. Just this morning as a leadership group, we were talking, okay, what's the best practice for a C corporation? What's the best practice for an S corporation? And that's what we're going to be talking about with our clients here in the remaining, 7+ weeks of the year. So again, consider that, because it's going to be different. Have the conversations now with us or with your advisors so that, again, you are, minimizing the tax effect that you'll have whenever you incur that effect here in 2020 or in 2021. Okay. And again, stay tuned. You will know as soon as we know. Like Lee said at the beginning, many of you have been with us every step of the way here, with our webinars, and we will be on top of this. We will make sure to let you know what happens. Both, again, the timing, whether the expenses end up being deductible or non-deductible. And of course, if there's any, change to, the tax law, we'll be all over that as well. So with that, Laura and I have said a lot, but Lee, I see we have a lot of questions coming through, so I'll turn it back over to you.
Okay, great. Andy and Laura, fantastic. A lot of information. Yes, we have had several questions come through, but I know just in our normal day-to-day interaction with clients, we get a lot of the same questions coming through. So we did put together kind of a few FAQs that we'll cover with you guys now. Please continue to send in your questions. We will get to those. I know we've only got a half an hour scheduled for this, but we're going to go a little bit long. We want to make sure that everybody gets answers to their questions. So feel free to hang with us. And if you do need to drop off, keep in mind, this will be recorded and you can watch the rest later. So let's dive right in. One of the questions I know we get a lot is, do I need to wait the full 24 weeks before applying if choosing the 24-week covered period?
The answer to that, Lee, is no, you don't need to wait for that 24-week period to end. If you have spent all of your PPP proceeds on expenses that are eligible for forgiveness, you can go ahead and do your application earlier. We do recommend, though, that you wait to do your application until you have spent more than just the qualify, or more than just 100% of your PPP loan proceeds on eligible forgiveness expenses. And this is kind of like a safety net, right? We want you to have more expenses listed on that application in case some of them get denied for some reason. We also want you to have some additional expenses in there to help cover some of the interest that has been accruing on the loan too. So no, you don't need to wait to apply, but there's some considerations to take into effect when you're thinking about whether or not to apply right now.
Andy, can you cover how to calculate an FTE?
Yeah, absolutely. So really, it's obviously based on each employee. And so you simply take the number of hours worked, divide it by a 40-hour work week. That's your number. And again, when you're doing the calculation, you're taking the average of all the weeks in your covered period, whether it's the 8-week period or the 24-week period.
All right, a lot of questions around insurance and retirement plan contribution. Can I include an S-Corp owner employee's health insurance and retirement plan contribution in the calculation?
So the specifics on that are dependent on whether you're using an 8-week period for your covered period or a 24-week period for your covered period. If you're using the 8-week period, an employee owner is capped at their salary eligible for forgiveness is capped at $13,385. And that $15,385 includes whatever your S-Corp owner health insurance premiums are too. So wages plus the health insurance, not more than $15,385 can be forgiven in that scenario. If you're using the 24-week period, then you can use 2.5 months worth of wages up to the $20,833 amount, and that's factoring in that $100,000 cap on wages eligible for forgiveness. And here again, that also includes health insurance. So health insurance is not on top of that $20,833 or $15,385. I want to be really clear about that. But you can include the match, for example, on the 401k, like the employer paid portion of retirement plan funding for an owner.
So Andy, in your portion, you talked about the 3 different forms, right? Can you talk about, as a sole proprietor, an IC or an SC, what form people should use?
So just to explain the abbreviations there, obviously sole proprietor, IC, independent contractor, SC would be a self-employed individual. And the assumption here is that you don't have any employees, okay? So it's either going to be one of the 2 easier forms. You're either going to do the 3508EZ, or if, as I alluded to, if your loan is $50,000 or under, then please take advantage and use the 3508S.
One thing I want to add in here too, because I don't think we covered it in any of the previous slides, and I don't know that it's come in as a question too, is it's possible that for PPP loans under a certain amount that you might not need to file an application at all. With the HEROES Act that Congress has been trying to pass and is now obviously on pause, one of the stipulations in there included like a, kind of thinking of it as a get out of jail free card, but they were saying that the goal was anyone with a loan under $150,000 wouldn't need to apply for forgiveness and wouldn't have to do the application. So that might be one of the benefits of waiting to not do an application yet, and maybe you won't even need to do one. But sometimes that uncertainty creates more anxiety, and I know we've all had more anxiety to deal with than anyone has wanted during these crazy times.
Yeah, thanks, Laura. All right, let's stay with you, Laura. Can an employer have both a wage reduction and an FTE reduction for the same individual?
Well, that only really applies if someone has reduced their hours and reduced their gross pay. So it's a two-step and type calculation.
Okay, all right. We're going to dive into some questions from the audience. Please keep them coming. We have several to address, but let's dive right in here. So the question is it possible that the loan is forgiven in 2020 and the non-deductible expenses are taxed in 2020? Then later the rules change and the forgiven expenses will not be taxed? Could 2020 taxes be amended in that case?
Yeah, I can take that one. That's certainly possible. And I think, there are strategies to consider with that possibility. So I certainly would reach out to us, talk to your advisor in advance, okay? Because it's going to be a lot easier to address that possibility if you consider it in advance. If for some reason that happens, it hasn't been considered in advance, yes, absolutely, you could amend that return and deal with whatever consequences that means. But like I said, please go ahead and consider it in advance.
So Andy and Laura, this is a question that's come up too. Can you talk about what's the downside to waiting to see how this all shakes out?
As I alluded to, I think these PPP loans were big and they were very helpful to practices, but it's a loan, right? And sometimes loans create anxiety or the fact that how you've used the proceeds, someone's going to be making a decision on whether or not that's forgiven. Sometimes just by doing nothing or waiting, it's just creating more anxiety for you and your practice. So that's one of the number one things that I think of. Andy, what do you have to add on that?
Yeah, I think in talking to clients, for a lot of you, it's personal preference. Some of you don't like that anxiety. You just want, okay, I've spent the money. The spirit of the program is as soon as I have and my bank takes the application, I'm going to apply, I'll receive forgiveness. Some of you are wait and seers. Let's let the dust settle. I don't mind having that loan sit on my books. There's no harm in waiting is the other thing if that's your personal preference. So again, just talk to your advisor, talk to us, and we can kind of guide you through those pros and cons.
As we've been talking as a leadership group here, we've been joking, but it's not so joking, right? That we almost need a flowchart diagram to map all this out to help make decisions on it and help put a picture to it, a visual, like if this, then this, if this, then this kind of thing. And one of these days I'll get my crayons and some fresh paper out and model it all
out. That'll be fun. All right, so a question that came through is, my loan application is with the SBA. Do you have a sense of how long it's going to take for that to be processed? And let me maybe generalize that question a little bit. What are you guys seeing from those clients of yours or the bankers that you're talking to as far as how quickly those are getting processed?
Well, we've had some clients that have submitted their loan forgiveness applications right away. And by right away, I would say their coverage period ended, or they knew they spent, well more than the loan amount and were ready to go ahead and ship the information off to the bank. What we've seen is that the banks that are accepting applications have been pretty quick to get through those and move them along to the SBA for forgiveness. When what we saw earlier was that none of them were moving through the SBA. It was like the SBA hadn't picked any up after a few weeks. And then I had seen an article too online that had stated that the SBA hasn't started looking at any of these loan applications. And then it was pretty quickly after that we started seeing the SBA start to look at loans. So I've had a few of us here have had clients all have decisions made from the SBA just this week. So I would say the process is starting to move faster and quicker than we definitely originally saw, which is reassuring.
Okay. Another question was about selling a practice. So I'm considering selling my practice. Should I wait until this whole process is over with, or can I handle that now? I'm sort of paraphrasing.
I think that's a very specific question. I think in part it depends on your entity structure, it depends on the terms of the sale, depends on when you're going to close. I think it's one of those things that, right up front, you negotiate, you discuss. It may end up being a carve out of the deal. It's something that has to be in the agreements that are formed with the attorney. So again, just not good or bad, but I think it can be worked around, but it's something so specific that you're going to have to work through it.
All right, and you guys are helping people buy and sell practices all the time, so I know there's a lot of different ways that can go, and that's definitely a sit down and work through that with your advisor. Well, we're already about 6 minutes past. We do have a few more questions that have come through, but they're a little bit more on the specific side. I think we'll probably wrap up here. I think I'd like to remind everybody, you can visit svaaccountants.com/events, where we're going to make the recording of this webinar available. We'll also have additional information on upcoming events. If you have additional questions coming out of this, please feel free to reach out to us. Those more specific ones might be better for sort of a one-on-one conversation, as opposed to something that might only apply to you on the webinar. Our next veterinary webinar will be on December 2nd, and the topic will be what you need to know about year-end tax planning in the COVID-19 and presidential election year. All right, so let me remind everybody, the SVA team is only a phone call or an email or a Zoom call away. So if you're a client, reach out to your SVA professional as questions arise. If you're not currently an SVA client, please contact me and I will get you the answers to the questions that you have. Again, we're here to help. Thank you again for joining us today. Have a great rest of your day, and we hope to see you at our next webinar on December 2nd. Thanks a lot.
Great. Thanks, everyone. Bye-bye.